Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Facebook on the daily, weekly, shorter term time frame, so we could be forming a bull flag here, normal, healthy consolidation, and we got a dip today. We were looking to fill this gap at 126.73. We came about 11 cents short, so we did not fill that gap, but the bulls clearly bought the dip and closed fairly close towards near the high of the day. And clearly it is normal, healthy consolidation going on at this point after such a big bull move. The weekly time frame is an indecision little doji, very tight trading range. We're seeing that across the market. The S&P 500 in itself is a really tight doji this week, so there's not much information to have there at all. But on the daily time frame, as long as we keep forming higher lows, and at this point, as long as the bulls consolidate and form a higher low compared to this 100-day moving average support, 124.29, the bulls remain in control. So looking at Facebook on the 5-minute time frame, the bears came out right away with a quick dump, a little short-term bounce attempt, and then we had the low of the day at 127.55, 127.58. You can see the range tighten. A little bit of a descending triangle pattern where you have a horizontal support base down at the lows, and then it gets tighter and tighter with a descending resistance line, and then a clear bear break. And you can see very clearly lots of traders were waiting for that bear break by the huge spike in volume, twice the volume of the previous candlesticks, and of course the big dump that followed. Now from that dump, we see the low of the day hit 127.23, a little bounce attempt, and then we have the same pattern form. Horizontal base of support, a descending triangle with lower highs, tightening range. It's really the same exact thing happening here. You could almost mirror image it there. But look at the low of the day, 126.85 and then 126.84. So we hit a new low of the day, but I always give a penny or two wiggle room, and I call that a double bottom. Even though we hit a new low of the day by the penny, and $127 stock, I call that a double bottom. Bulls showed up the next candlestick, and we broke the lower high pattern. So as soon as we formed that little double bottom, I posted in the chat room, keep an eye out on this double bottom. We need to turn some moving averages into support on the 5-minute time frame now. We turned the 20-period moving average into support. We started breaking this lower high pattern, and then from there, the bulls controlled the rest of the day. So the double bottom is what had us originally start to look bullish, because it's very clear if the bears were to break that double bottom and hit a new low of the day, that's our exit point. And I like having a clear exit point on every single one of my trades where I know that if X were to happen, then I exit the trade because it's not going in my way. And in this scenario, X would have been if this double bottom had broken. So the bulls saw a nice spike. We consolidated, formed a higher low, higher highs, higher low, higher high towards the end of the day, and a nice recovery, clearly buying that dip. On the hourly time frame, all moving averages back as support at the end of the day. Didn't even test that 20-period move or the 100-period moving average down at 126.51. So it shows the bulls are still strong. They bought that dip very nicely today, and we'll see if we can break that high of today, which was up at 128.43 tomorrow. That would show that consolidation is through for now. But if we keep seeing lower highs and consolidation, we'll know we're not ready just yet for the bulls. Obviously, we had Netflix earnings after hours, and Facebook is seeing a little bit of upside because Netflix is seeing a lot of upside in reaction to its earnings. So we'll see if that momentum gives the bulls momentum to break 128.43, the high of today, and head back to the high that we've seen on this move, 129.27. So nice buying of the dip by the Facebook bulls. We'll check back in tomorrow and see how it plays out. Thanks for watching.